later. It's like, sweet child of mine. But he actually went to Juilliard, so he had some talent. So anyways, hey, good morning. It is a Wednesday. Yeah, Wednesday, August 15th, right in the middle. We must be close to CPI. Anyways, risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm. For those who want it their way, ECN account, not a problem. Fixed spread account, not a problem. Variable spread account, not a problem. Whatever fits your business model. Each one of those are more appropriate for scalping or spot trading or swing trading and all that kind of stuff. So really, it's fine. Oh, Barry said Barry made 5 trades this week and all profitable. Booyah. Now, Barry, was there a theme to these trades? Were they all similar trades, or are you compiling them? Were they all sort of weekly swings and they're all based on the same type of pivots, or like, could you repeat these? Yeah, all dollar trade. So they bottomed out for you. John says CAD yen bounced exactly where it's supposed to bounce. Yeah, cool. John says a question about Trade the News. You know, I don't know anything about their pricing model. Nothing. You know, I've had a relationship with them and a site license with Trade the News for probably, I'm guessing, 12 years. And of course, things have changed a lot over the 12 years. Anyway, I don't know. You know. Cool. Barry says still a dollar bull win. Okay, cool. But there were some bounces in there. That's cool. Okay. Barry says long USD Swiss franc. Oh, so we'll go into. Anyways, let me finish with the disclaimer. I do these sessions 7:30 in the morning with the overriding goal of teaching you how to put your trade plans together. We start with a bias, ideally based on macroeconomics and central banking policy, or long-term technical analysis. Right? That's the strategy side. And tactics, that's where technical analysis comes in for entering and exiting trades at support and resistance. If you remember my book from a long time ago, Strategic and Tactical Forex Trading, that's the whole idea. Strategy and then tactics. Ciao. I had someone work for me for like 4 years and went on and started his own business on the side, and it said in there that he came up with this radical idea of strategy and tactics and then put them together. I'm like, dude, you didn't even read my book. I wrote that like 5-6 years before you even came up with your radical idea of strategy and tactics. It was actually quite funny. But, you know, it makes sense, doesn't it? Strategy, tactics. So I'm trying to teach you how to put these things together. Now, during the summer period where there was low volatility, I focused a lot on strategy. Okay? And so now, as things start to wake up, I think you'll find that there's a lot of tactics. Doing is getting lost in the tactics and never developing a strategy. I think the tactics are less important. I think strategy is most important. Because think about it, for many years, traders didn't even use technical analysis. They made a decision. They're like, based on that macro decision, or based on that central banking policy, I'm a bull or I'm a bear, and then and that's that. And some banks still trade that way, and I believe it's Morgan Stanley that still does it. I used to subscribe to a service where I could see their trades, and I can get their analysis. Say things like, I guess we'll short around 130 with the target of 125. And you're like, dude, you can just tell by the numbers they're just totally winging it, right? It's not like they picked out an exact pivot or exact this or exact that. It was just like short somewhere around 130, take profit around 125. Just big round numbers. But you can get better by using technical analysis and refining and stuff. But if all you are is one, if you're all tactic strategy, ask any athlete how that works. You don't win. Well, you certainly won't win the championship, right? So. John says, well, to correct me if I'm wrong, however, would it be fair to say early traders did not have the chart? Yeah, no. So like when I first started, charts were a very, very new thing, but they weren't radically different than this. If you didn't have an indicator, my first trading platform was IntelliTrader, I think, and that was back when FXCM didn't even have charts, and I think FXCM was my first real account. You had to wire cash, and I think it had to be a minimum of $5,000. It might have been a minimum of $10,000. I think back when my first GFT account needed a minimum of $10,000. And again, this was before they could accept credit cards and all this kind of stuff. It's really difficult, right? But anyway, so my FXCM account, you'd get an account, and it was just colors. These things here is just colors. And then you had to go to someone else, and then I think it was IntelliTrader charts or something. And it was like $150 a month. Now, if you couldn't place a trade on your charts either, right? But my point is the charts were no different than this MT4 account. And there was like 1,000 indicators, and that was part of my learning process. I'm like, what's this? What's that? And you just start looking around, and a lot of it didn't make sense. So I started with very basic things like moving averages, right? And then later on I got into, but none of the charting packages had pivot points. And by then, brokers started offering charts. So I think by then I switched from FXCM to GFT, and GFT had beautiful charts, but in the first version you couldn't trade on them, but they were attached kind of thing. So they had their own, but they had everything I needed but pivot points. So then I hired programmers, and it was a lot of money back then to hire a programmer. I mean, my gosh, I don't know, it cost me $500, maybe $1,000 to have someone program pivot points, right? So for the longest time, right, for years, I was the only one at GFT and the only one at FXCM that had pivot points. Because I remember I went on speaking tours of the world and went to conferences, and like nobody had pivot points, nobody. So it was very interesting. Fast forward, great. Now we're starting to realize they're important. Right. So, but when I first started trading, I knew money managers and wealth managers and other institutional investors, and they laughed in my face that I used technical analysis. Oh, this was all before REFCO as well. I was around when REFCO blew up. And another funny story, I was at the NFA offices in Chicago for a meeting, and the head of the NFA came out, and he was explaining how their policy, build a better industry, which is fine, and that there was no situation where people had ever lost money under the watch of this new NFA. And I'm like, what the frick are you talking about? So anyways, I raised my hand, right? I'm like, hey man, hey. And he's like, you over there? Like, hi, my name is Wayne McDonell. I'm a Forex trader. I'm a CTA, and well, I know lots of people that lost money. Refco blew up, and it went years before money, and just, I'm like, what are you talking about, right? And I'll never forget it. He looked at me and he said, "Oh, Forex? Oh, that's just retail." And he laughed in my face in front of like hundreds of people. And you're the guy that regulates my industry and you're laughing at me like it's retail Forex. It doesn't matter. That doesn't count. So I swear to God, right there, and I walked out of the room in front of everybody. That's it, in the middle of lunch. Like, I paid a lot of money to be at this event. I'm like, this guy regulates my industry. And he laughed in my face, like, oh my God. So that was the time when Forex got thrown under NFA, and NFA is like, we don't want to do this. Forex is like the bastard stepchild here. We don't want to deal with this. But then they decided to regulate the heck out of it. So, wow. But anyways, yeah, Refco took a lot of people. Well, they didn't. It blew up. A lot of people lost money, and then FXCM took over the Forex accounts. John, if you want that answer, I'm guessing it's brilliant, but go to the BIS. Go to the BIS website. Was it BIS.org or something, or BIS IND or ITL? Or, anyways, but yeah, it's probably 6. Zeal did I punch him? No, but I did walk out. I didn't know what to do. This guy regulates my industry, and he laughed at me. I didn't know what else to do. Yeah, so anyways. But then it went from unregulated to overregulated. But there were times when brokers, I remember one, it was called One World or something. One World got into serious trouble at the yen, and then the yen's unwound, and all of a sudden everyone's account was. So the NFA goes to the world headquarters in Florida. And it was like 2 kids running their Forex brokerage out of their dorm at like northern southwestern Florida, or south central Florida county college. Anyways, and they were running like $20 billion in yen short college dormer. And apparently they didn't have the liquidity to take people out. So anyways, that was Forex back in a long time ago. So the NFA came in and they cleaned things up, and all of that is very, very good. But it's all history, right? It's all water under the bridge. It's all where this industry came from. It went from, so let's go back, a quick history lesson, and then we'll go back into the charts. So let me get rid of me. There, not long ago, so 20 years ago, Forex was for brokers, or not brokers, sorry, big banks only. Okay? It was giant, enormous, big banks only. They didn't need any leverage because they had all the cash, and one small trade would be, they probably 100M was probably the minimum, right? Moving such big quantities, and one bank says the other bank, hey, we need to move 300M, and they take a spread on that. Yeah, sure, Euro USD, I'll charge you 17 pips, and they'd move it, and 17 million bucks on a trade. It was great. That's all it was. And then retail developed, and it was kind of the Bitcoin of the day. It was full of scumbags and scam artists. It was completely unregulated. No one in there would do it. And that went on for quite some time. So like I said, when I first started, there were no books. There were no books. And this was even before Amazon.com, right? So like, this was a while ago. There were no books. If you went to a library or wherever, to a bookstore, and you're like, I need a book on Forex, nothing. Foreign exchange, nothing. There's just nothing. So it didn't exist, right? And so at that time, it just wasn't regulated. It was the wild, wild west. People had 2001 leverage and all this kind of stuff, and brokers were trading against you. I know someone that worked at a brokerage firm, and I met him at a conference 20 years ago. But anyways, he said one day, he was working the desk, and his boss came in on non-farm payrolls and said, "No clients make money today." Right? That's how it was. So they would do things like they'd get the number, and it was a good number, so they would put on the charts, and every loser trader just sold the big red candle. All of a sudden it'd flip and go up 300 pips the other way and wipe everybody out. And anyone that happened to be long on that, then they would drop at 300 pips and knock everyone out the other way, right? And all of a sudden, no clients made money. Long clients lost money, short clients lost money, right? And that was it, right? And then I met, actually I trained someone who, he went on, him and his father had this great system, and we were talking about this at the FXCM Expo 2004 or 5 or something. Anyways, so I taught him how to trade, and then he taught his father how to trade, and then he and his system, where they would have 4 different brokers up during non-farm payrolls, and inevitably you'd see 3 of them would have green candles and 1 would have red, which means the red one was trading against their clients, trying to wipe out all their clients. So you would see that, and knowing that the market really is going up, but that one broker is shorting against their own clients, trying to get all their other clients to sell, like totally screwing their own clients, then he would buy that bottom. And of course, the broker can only drop it for so long, and all of a sudden it would pop. Back then we're talking 200-300 pips, and so they would bet against the one that was red when the other 3 were green. And so he totally did an arbitrage on it. And it was a very interesting system. But then the NFA starts getting complaints and all this kind of stuff. So the NFA shows up, and they're like, we have to clean up this industry. And that's what they did. And they did a really good job of it, but then they overdid it. And all of a sudden, their brokers, like, let's say by 2005, 2006, 2007, you had let's say 2007, you had all the fly-by-night scumbag brokerages all shut down by the NFA. Cool. But then you had like 3rd tier, 2nd tier, and 1st tier brokers, right? Depending on size and all that kind of stuff. And then in the United States, they got rid of all the 3rd tier brokers. And then all the 2nd tiers started falling off. And then the 1st tier started buying the best of the 2nd tier ones, because the 2nd tier ones just couldn't afford to be regulated. And then all of a sudden, all the top tier ones started going out of business because the NFA was shutting them down. It got really strange. So, maybe the next 10 years, once again, the whole industry will go through a maturity process. I think a global financial crisis didn't help anything as well, but at least you don't put your money in an account run by some college kids out of their dorm, right? So I think we can all agree that was, those situations were bad. Anyways, very, very interesting history of the world of Forex, anyways. Okay, so let's do some technical analysis. All right, so as you see here, we have a bottom, sorta, maybe, right? Bottom, sorta, maybe. So what is it, Wednesday? Yeah, so we have 2 scenarios. I guess let's get off the 15-minute chart. We have 2 scenarios here. Bears are heading down to this level here. Okay, that's where bears are targeting. And we've done that now. This is about the 16th day of this trend. Yeah, John says it's interesting to know your roots. And, and I think it's important that people do know. There really is a history. It's not magic, right? There's a lot of people that have been part of the process of Forex trading, mature, like a real business. Like I said, when I started, people laughed at me for two reasons. Well, related to trading anyways, right? They laughed at me because I used technical analysis, and everybody knew that was okay. Like literally, I had to fight against an entire industry and say, well, there's something to this technical analysis, and people couldn't stop laughing. Like, no joke. And then the second one was I was doing Forex, and it was the funniest thing ever. They're like, you're such an idiot. I'm like, I know, but I'm trying. I like it. I like news, and I like the markets. I just like talking about oil and trading CAD, and I like, back then I would watch gold and trade Aussie. I mean, I liked the idea of trade session. It just sounded good. Like, yeah, I'm going to trade some gold out of Tokyo. I really liked it. But people thought it was stupid. And I imagine Bitcoin traders feel that way, where people are laughing like, hey, that's not real money, and it's just a scam, and it's crazy. But one day it could be different. Right? And I think the most important part of that conversation is not the coins or whatever you want to call it. It's blockchain. So blockchain is legit. Blockchain is going to be around for a long time. So it's conceivable. A Bitcoin is conceivable, right? Is it in its infancy? Yes. Right? But why wouldn't you want to be in on the ground floor of something that could be revolutionary? Right? So, for example, I actually signed up for a blockchain course at MIT, and then I backed out at the last second because I'm in at Harvard. How could you possibly do Harvard and MIT at the same time? But I'm like, but it's only 6 classes on blockchain. But that can get complicated. But anyways, I think it's worth exploring, right? But people did laugh at me because I was a retail Forex trader, and they did laugh at me because I used technical analysis, and nobody's laughing anymore. Every single person I meet now, I tell them I'm a foreign exchange trader. Like, so I'm doing this Islamic finance and banking class at Harvard this summer, right? I'm talking to my professor, and I'm a foreign exchange trader, and he's like, what? So we just talked for about, I don't know, he asked me for 10 or 15 minutes. He just asked me questions. It was like, so like, how do you decide the value of a currency? And I'm like, well, for example, like the Aussie dollar, I might look at the Baltic Dry Index and look at the cost of shipping iron ore and coal, which are the 2 major exports out of Australia, to a place like China, which is, which is demanding a lot of these natural resources, right? Because they're such a big economy, and they produce so much for other people that they need these natural resources. So if you're going to move iron ore and coal from Australia to China, you got to put it on a ship, and then I track those shipping prices in real time. When shipping prices are high, it's either a supply issue or it's a demand issue, but usually it's a demand issue. So therefore, I have a good read on global macroeconomics. And if the Chinese are buying iron ore and coal from Australia, they can't do it in renminbi or yuan. They have to dollar first. So I look at all that kind of stuff, and then I buy the Aussie dollar, or I sell the Aussie dollar. And he's like, right? And he loves it, just totally into it, right? But nobody laughs at me anymore. right? Nobody's laughing. So very cool stuff. All right. Anyways, going back to this. This is oil. Okay. Looking at demand and supply, I think demand is a little bit lower than it will be in the near future, simply because there was a time when demand was high. Let's redraw it now. There was a time when demand was higher than it is now. So we'll call this demand star, D star, D1, and now we're probably at D2. The reason that a few months ago demand was higher than, let's say, a normal equilibrium, and now is or higher than a normal equilibrium, and then now it's lower than a lower equilibrium, is this whole process here, the bell curve process of June 1st. We'll call it JN1, right? This is Jan 1. This is D31st, right? And so there's this process here. If you look at oil inventory data over the course of the year, this January 1st to June 1st, we're typically building up inventories, and then this point we're typically diminishing our inventories. And this whole buildup has to do with the driving season in the United States and all that kind of stuff. So this period here, you're typically increasing demand. Increasing supply. So there's demand that needs to go along with that. If you're going to increase supply, you're going to have to demand the commodity, right? So anyways, so now we're going through the summer season and we're almost done, but we're not building up inventories. We're diminishing them. But I think there's sort of now an economic demand. So as supply, I think at some point at the end of the summer, which could be starting this week, not only will supply fall, but demand will rise as well, because macroeconomic activity will increase. Okay, and it's not until the holidays at the end of the year kick in that that supply will sort of kick back in, right? So we're in this process now of supply should diminish, and I think demand will pick up again based on just things like macroeconomic activity and winter. So those are the kind of the two things. Well, we're in August, so we're a ways from winter, right? But you have to remember, winter for us doesn't mean when it snows. It means when refineries start building inventory based on when they think it's going to snow. Remember, we're always in the future, right? Or we should always be in the future. Dude, do I get some gray hair here? Yeah. I keep looking at the camera. I'm like, anyways, right? So you have to decide. You have to decide somewhere, like, okay, if that's true. Remember, hypotheses. Supply falls, demand increases. Either one of those, or a combination of both, should raise prices. Okay. Yeah, I just don't like this part. I don't mind gray hair, but this looks spotty. It's too much. Too much. I don't like it. Yeah. Well, I shaved and she's like, how about one? I said, do you have anything less than one? So we went half. Zzz, zzz, like half. My wife's like what, baby? What, baby? It looks good, baby. She's like, no. No, I'm like, it looks good. No. Mm-mm. Mm-mm. Well, I want all gray. would be better. So anyways, hypotheses here. If supply and demand, if supply falls or demand increases or a combination thereof, this should go up. Great. So that your strategy would be in the near term, in the next month, how about? I would like to buy oil. Now the funny thing is, if you do read the newspapers and such, they're so backward looking, aren't they? Where they're like, yeah, oil's falling. Like, yeah, I know oil's falling. It's been falling for quite some time. But they're so backward looking. And then they'll give you 9 reasons why it's falling. I'm like, yeah, but I knew that here and here and here and here. Like, why do you even report it? What's the point? Like, the people that read the Wall Street Journal didn't know that. The people that read the Financial Times didn't know oil was falling. And the ones that care, do they really only read about last week's inventories? Right? Like, who cares about last week's inventories? What they should write about is what inventories are likely to be in a month from now. Have you got into that mindset yet, guys? Are you sitting there thinking, all right, what are oil inventories going to be by October 1st? Yeah, Ren, you got it. How many people are starting to think that way? How many people would like to think that they would think that way? Right? Please. Yeah. Oh, hey, PJ, I got your email. Oh, we'll figure something out for you, okay? Follow up with me, though. Like, if you have to email me 10 times, do it. Okay? Yeah. All right. So, have you gone so far as, instead of reading about oil inventories, have you gone so far as go to the EIA or IEA websites, download, I think it's EIA, isn't it? I always get the two mixed up. The EIA website, the Energy Information Agency, right? Yeah, it is EIA. Have you gone to the EIA website, actually downloaded the actual data, the actual historic data, and made an educated best guess of whether it's going to go up or down over the next 6 weeks? Like, it's not complicated, but 95% of people don't do it, and I don't know why. Now, for a lot of them, they just don't know, but I tell you, virtually every day, definitely every week, that you should do things like this. Just go to the website, find the data. It's not that complicated to find. You might have to spend 20 minutes, right? I'm on the email list too, but people need to spend the time, right? And then you find the data and you're like, oh my God, this is very, which means, right? Well, here's a watch. Right? It's as accurate as that watch. Da, 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 da. All right? And then you say, ooh. Okay? So if you can kind of pretty good guess, then you can kind of pretty good prepare. Doesn't mean it's going to be easy. Doesn't mean it's free money. No. But that's where technical analysis comes in. So I don't know if I'm right. I'm probably wrong. Great. So I could sit here and not trade being probably wrong a lot and not lose money. Great. But if I'm right, we're going to see some technical analysis here. Okay. Does it look like we might be bouncing at this pivot here? I mean, it could totally be a coincidence. The 65.5 it seems like it might be bouncing, right? So at what point, if you think this is bouncing here, do you start buying? Well, you can't even think that way unless you want it to bounce, and you have to want to bounce for a believable reason. See, if you don't have a believable reason, something that you have internalized and truly believe. You can just get caught like chasing price in all directions, like, oh, I guess it's got to go up now. And then, of course, it falls, and you're like, oh, right? But if you have a belief, now you're simply using technical analysis to sort of backfill your belief. You think it's going to go up, so you need a good level of support. And so every time it bounces at support, you buy it. If you get it right, eventually you'll be right, and then you'll be right again, and then you'll be right again. Trend is up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. Okay? So that's what technical analysis is. Are we at support? Is the market trending up, down, or sideways? Well, it depends what time frame you're trading, of course, right? You could argue that we're sideways. Okay. If you're sideways, there's no market. We don't need this and this because that measures market. So if you think we're sideways, no need to measure market. And there's no trend. Okay. So if there's no market, there's no trend, you don't need those moving averages. Make sure you understand what these tools are telling you, right? But you had to decide that. Okay. So now what? Well, that means when you get down into support, you do something like you buy a 5A cross. Okay. It's a little dangerous until you get the higher high. So the second thing you could do is say, I'll wait till I get a higher high and then I'll buy the dip. See how conservative this is? You see how patient you need to be? To me, I don't think it's appropriate to use a Phillips curve when you have like $2 trillion of the central bank's money in the market. Okay. It just, yeah, because it's a manipulation, right? So it's not reality, it's virtual reality. Right? So anyways, you see how patient you have to be now? This is why I said, like, what if I'm wrong, then I happily not lose money being wrong. Yes, it is, John. See, once you really start getting into it, I've had people contact me and they're like, Wayne, I've been watching your videos for 2 years, and all of a sudden it dawned on me. I'm like, what dawned on you? Your charts are amazing. I'm like, really? You think so? They're like, this moving average is that moving average, and that moving average is this other moving average, and all that together. Oh my God! I'm like, I know. I'm like, yeah. Yeah, and I did it by myself. I was the kid writing the music, not the kid playing the song 10 years later. Yeah. No, I didn't make the pivots. Well, I made the pivots and the pivot strategy. Wyatt them on MT4. Anyways. So, this being said, guys, if you want this to go up and you're patient, you can afford to wait for something like that. And this time of year, you have to be prepared to have it up and then come all the way back down. On the bullish side and the bearish side. You just have to be prepared for that. I told you that since the Fed meeting in June, okay, right? Since the Fed meeting in June, I prepared you to accept that likely fate. But now we're preparing for something different. So this could easily drop way down here, or it can slowly stop and reverse. Which one's going to happen? I don't know. I really don't. I don't. That's why I use technical analysis to confirm or deny strategy. And eventually, hopefully, you've picked the right strategy and your technical analysis will confirm that and you'll do very well. So being patient means you made a decision, you think this is going to go up. So let me blow your mind. It will do this, just like I drew here, or some form of that, right? Eventually, you'll get it right. And you have to use technical analysis to confirm. You're like, aha, higher high, aha, double bottom, aha, something. But that's what technical analysis is. Confirms or denies your macro hypotheses, your fundamental hypotheses. And if that doesn't work, I have a plan B, bro. How about, or how about, or how about, or how about, I don't know, there's three plausibilities. I can do some calculations and I can figure out the exact price I would look for these patterns. Without the price, I don't care about the patterns. So someone asked me the other day, what about like Gartley patterns and such? And what about other candlestick patterns? And what about this? And what about that? I'm like, yeah, they're all good if they happen at the supporter. And a lot of people might trade them very well and find out they're still basically break even. Like, let's say half the time it works, half the time it doesn't. What's the difference? They work 100% of the time at support, or they work 100% of the time at resistance, or close to it. Like, so why don't you just focus on the support and resistance first, and then look for the reversal pattern at the price you thought it would reverse. And you'll notice that at least 30% of your losses will go away, which will make your winners be that much more successful and profitable, and you probably have a living. But it's not the pattern, it's you just happen to be buying where all bears are taking profit. And maybe if you're lucky, bulls will buy along with you and you will be a genius. Okay? But the genius part isn't that you bought it down there. The genius part is here's my mouse. You've identified that this is your buy zone. Okay? That's the hard stuff. And then the really, really, really difficult part is having the patience to wait for it. Okay? What if I'm wrong? What if the global economy collapses? Well, demand for energy will fall. And supply of oil will go up for a while. And then oil drops back down to $4 a barrel. And the United States stops fracking because it's not profitable. It's great at 60, but at 40, they stop fracking. And then over the course of 12 months, we draw down our inventories and oil prices start going up again. But is that a likely scenario? Like, you think that's very possible in the next 3 months that the global economy will collapse and demand for energy will just disappear? Like just completely dry up? So that's as wealth managers or as investment advisors or as money managers or as foreign exchange traders, we have to make decisions. Jay is like anything's possible. So Jay, if I was an investor, I would just immediately walk away. So you can't say that, Jay. Because if anything's possible, then I'm not going to give you money. I'd give money to someone that says, I've done the analysis and I know the probabilities and I have evidence to prove that this is most likely to go. Because I'm the client. I don't know what's going on. Anything's possible. It's the end of the world. And you're like, whoa, 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 whoa. I've done the research. Let me give you a very plausible outlook for the near future. And let me show you how we could make money. Right? So I know, and you don't have to defend. I know you know. I know you know that. But, right? Well, dude, well, the thing is, so I absolutely, totally, without beyond, let's say, beyond a shadow of a doubt, predicted that crisis, the financial crisis, right? For probably a year before it happened, every single day I'd read from, I did something called, I did weekly team meetings or something. This was the early days of boot camp. So I did FX boot camp, like I did technical analysis every day, and I think every Wednesday at Wednesday evening, like in the Asian session or something, I'd sit down and I'd read from the newspaper like grandpa, right? Except I was young and good looking at the time. And I'd sit and I'd read from the newspaper. In fact, I now remember, I collected articles from newspapers throughout the week. And we'd have these fundamental fireside, chats. And I would read through the reports, and then we got to the point where every time I did this, I went through all the reports and explained why they were wrong. Because remember, there was no indication that the end of the world was coming. There was no zombie apocalypse around the corner. And I'm like, yeah, there is. There definitely is. And let me explain why this article is sort of right, but sort of wrong, right? And I did this for a year. I looked like an idiot. But we talked about the fundamentals. And then one day I was watching CNBC or something, and a report came out, and they're like, 2/3 of people that bought homes last month already owned at least one home. What? Right? And we had a negative savings rate in the United States. And my next door neighbor lived in a crappy house, didn't even maintain his lawn, and he bought like a brand new Cadillac Escalade for $90,000. And I'm like, what? Like, poor people were buying $90,000 Escalades. I'm like, that guy doesn't have any money, right? So anyways, I'm like, oh. So the next meeting, I did this at boot camp, right? I sit down, I'm like, that's it. I have enough information. I got my trigger now. I am selling everything I own. And my wife just had a baby, like literally just a couple of weeks earlier. And my son, I think at the time was 18 months. So he just was standing on his feet. And he was cruising around the living room by holding on the couch. My wife is nursing a little tiny baby about this big, right? And I'm like, I'm out. It's over. It's all gonna crash. Okay? We sold our stock, sold our house, got the frick out of California, convinced my wife to leave her family and all her friends, even though she's got a little baby. Let's leave all her friends, honey. So I swear to God, I flew to Georgia. I bought a house. My wife didn't even see it. Flew back. So, right, sold our house, called the company, come pack her stuff, come pick up her vehicles and drive them out there, right? Then I flew back the next weekend, went to a furniture store, and the woman comes up. She's like, "Hi, my name is Margaret. Can I help you?" I said, "Yeah, I got $25,000. I want to furnish a bunch of rooms." She's like, "What?" I'm like, "Yeah, I need a dining room. I need a living room. I need some bedrooms. But my budget's 25K, and I need to be out of here like in 90 minutes." And she's just like, "Let me take you around." She almost like exploded. Boom. Furnished the whole house, flew back to California, got everyone on an airplane, off we go. 3-4 months later, the housing market collapsed, the stock market collapsed, and it was all over. Absolutely, totally true story. So what do you tell someone after? What could you do? So I went to conferences like in New York and stuff, and I did a presentation on the TED spread, on the yield curve, and on the VIX. There's so many people in that presentation. For the second time in my life, the fire marshal came in and had to kick people out because there's too many people in the room. And I did this presentation, and people, it was like at the end of it, like dead silent. Like, I swear to you, people had this look in their eye like, oh my God, right? Like they almost started to cry. Well, once is, what were you trading at the time? All right, go to FX Street. In 2007, I was in Spain at the end of the FX Street conference, and we're doing this Q&A, and the audience is like had questions and stuff like, give us like something we can do about this financial crisis, right? Because 2007 was the beginning, remember? And I had already moved to Spain. Like, I was already done before the crisis hit. So now I'm in 2007. I'm in Spain at the FX Street conference, and it was just starting to happen, right? The stock market had just crashed. There was a big move in the currencies, and it was starting to float up again. And a whole bunch of questions from the audience came up, and the other speakers didn't really directly answer the question, right? So anyways, I said, look, you guys want to trade? Let me tell you about a trade. And by the way, this is recorded. I'm sure you can go find it at FX. And I said, look, I did the research. After the initial stock market crash, and by the way, this is within 90 days of the crisis starting. I said, at that time, the largest purchases in 3-month treasuries occurred. The largest purchase in the history of the world. What does that mean? It means the stock market crashed. Ben Bernanke at the time said there was nothing to worry about. Remember, the ECB raised interest rates. This is how early it was. The ECB raised interest rates. And Ben Bernanke's like, yeah, this is subprime. Don't worry about it. That's how early it was, right? And I said at the FX Street conference, the largest purchase of 3-month treasuries occurred at such and such day in the history of the financial market. That's significant, don't you think? I said, so what do you think they're doing? Well, they're sitting on the sidelines because the stock market's crashing. And they're like, whoa, 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 I need a 3-month timeout. So they're cashing out, getting liquid, dumping money into the 3-month treasury. And what do you think they're going to do when this timeout is over? Well, if they take all their money out of the 3-month treasury when it matures, and I said, you can kind of guess when that's going to be, because we know the date the purchases started happening, whether it was this day or the next day or the next day or the next day. Well, in 3 months, the treasury will mature, and they'll get all their money back. So they have a choice. Think how logical this is. At a certain day, If you put $1 billion into a 3-month treasury, then at the end of 3 months, you get your $1 billion back. So you have a choice. If the market is stabilized and the economic data is improved, you would buy the stock market back, wouldn't you? Because you just had a 20% drop. You're like, I could just buy all this stuff up because people were just freaking out for no reason. It was only subprime. Ben Bernanke was correct. It was only subprime, nothing to worry about. And you just buy it all back. Or you're like, oh my God, I'm so happy I've been out of the market because over the course of 3 months, it's getting worse and worse. And banks are folding and subprime is now spreading into prime. And like, oh my God, and everyone's over leveraged into, oh, holy crap. You buy another 3 months and you take another 3 months. So I said, about this specific day, information I just told you, on this day, they bought 3 months treasuries. So guess 90 days ahead, somewhere around this day, that decision will be made. They either buy the stock market back or they don't. So if they buy the stock market back, like you start to see green candles in the S&P 500, buy the pound yen. However, more likely, Ben Bernanke's wrong. And by the way, in that 90-day period, the ECB raised interest rates and then cut them. Raised them by 25 basis points and then cut them by like 75. They realized, holy crap, we're gone. ECB was just totally off the clue train. The British were worse. They're like, this is a Yankee problem. Are you mentally deranged? That's what the Bank of England said. This is not a problem for us. Like, this is the world we were in at that time. And I'm the one going like, no, it's the end of the world. Right? So anyways, if they don't buy the stock market, right, sell the pound yen. I said specifically, sell the pound yen. And I said, it will fall at least 3,000 pips starting about whatever it was. It was the 90 days from that date I'd given, right? Is that a legitimate call? When somebody said, right about this day, like some guy like proposed, like, why don't we do a webinar that day? Like, well, we could, but it's not going to be exactly one day, but because this many people bought treasuries this day and the next, but the volume was extremely high. So all about that time, right? It wasn't going to be on an hour, but over the course of that week or two. Okay. A 3,000 pip call several weeks in advance. I was wrong. It fell 5,000 pips. Sorry. Okay. The point, not that I have a crystal ball. The point is not that I'm smarter than everybody else. The point is that the data was there. And with a reasonable amount of strategy, up by tactics, you can do well. The pound yen was highly correlated, and the pound yen moved more than everybody else. Well, okay, so now I get the same question. Jay says, will that happen anytime? Will that happen again anytime soon? And I have a friend about 3-4 years ago said, he lost some money during that time, like everybody. And I said, no, I'll take care of you. I watch this stuff all day, every day. I got you back. If we get to that point again where there's a decline, I will tell you. About a year after that, there was a significant drop. I think you remember it was in January where the stock market dropped 10% in like literally 3-4 days. And he called me again. He's like, oh my God, is it here? Is it time? Is it all crashing down? I'm like, no. Don't worry about it. I got a line in the sand. We're near the line in the sand, but don't freak out. And a week later, it was up 10%. So he came up to me. I was at his party. He was throwing a big pool party. 50 people were there. Hey. And I'm like, no, we're good. It's just the Turkish lira. Don't worry about it. You're good. I will let you know. So Jay's asking you, will a crash happen anytime soon? Well, first of all, I don't know. And second of all, I don't see any fundamental indication. Okay? But for you and me, like for us, we're professionals, or you're going to be a professional, right? That back in the 2006, 2007 crash, because remember, I talked about it all through 2006. And then we traded it 2008, 2009. It's just a trade. Right? It's just a trade. No big deal. It was just, that's how you had to do that in California. Because what happens if I sold my house in California and bought another house in California? Nothing changed. Okay? So I had to sell something expensive and then buy something cheap, basically, right? I had to get out a pound and get into yen. That's kind of what I did. Okay? Juan says, has a stock portfolio, can't see it going any further. Well, you have to look at like earnings. You have to look at things like macro, again, the macroeconomics. Should you sell Apple because Turkey's going to stop buying iPhones? Yeah, but they were buying Chinese iPhones anyways. No, well, the foresight I don't think is impressive, John. Now, I still hear, even to this day, like, oh, well, it was unpredictable. I'm like, no, it was incredibly predictable. Because especially back then, 2007, I mean, I have 10 more years of experience than that, right? 11 more years. So even back then, I could say, well, I was at least half as good as I am now as far as my ability to do fundamental analysis. But that was stupid easy. Experts on TV, they're like, oh, that just could not have been predicted. Like, are you mentally deranged? It was simpleton. A fifth grader could do it. And that's why I said, when I did the presentation on the VIX, the TED spread and the yield curve in New York, right, to a full room, it went quiet. And you could see in people's eyes, here's what was going through their mind. In a very simple, clearly explained 1 hour presentation, I gave I explained 3 tools that easily predicted, clearly predicted a system. And everyone's sitting there, they just lost 50% of their net worth because their money managers, their financial advisors, their hedge fund managers didn't do anything. They didn't predict it. They didn't protect them. They didn't hedge them. They didn't tell them to cash out. They did nothing. And I very clearly, in simple terms, use those 3 tools to explain, based on common sense, things like, under this yield curve, companies are unprofitable. What do you think happens to a stock market when corporations, they have earnings, but they're unprofitable? What do you think happens to the stock market when in the near future, the expected future shows losses? Because we know the stock market represents the next 6 to 12 months of expected profits. So I can just very clearly explain that a company with 5% profit margins paying 6% interest on loans for their inventory, they might get past 1 or 2 quarters of showing sales growth. But if anyone looked at the profit margins of being negative, then by the 3rd quarter, people are going to look and say, holy crap, borrowing costs are so high, this company is not even profitable anymore. I think I'll sell their stock. But what if it was every freaking company on the S&P? Time to get out. The cool thing is, I was explaining this to FX boot campers a year before it happened. I remember when I brought up the yield curve and showed that it was inverted. Someone borrowing money for 30 days was paying 6% interest. Somebody investing money for 30 years got 5.5% interest. 30 years versus 30 days. 30 days was more expensive. We're like, it's gonna crash. So when you do things like, is the stock market going to crash again sometime soon, right? Well, first of all, what's the average earnings per share ratio in 18? That's not crazy. But let's just go to yield curve. It's not inverted. Oh, yeah, okay, it's flattening and stuff, but it doesn't indicate a crash. Someone mentioned the Phillips curve. Well, you're going to work with it. If the central banks of the world are propping it up, it's not like it's a true market, right? It's a manipulated market, so it's not going to give you the right data. So I wouldn't use a Phillips curve or something. But if you look at the yield curve, if you look at the debt spread, I mean the 210, right? The 210 is what? It's not even 0.5%, but it's flat. But it's not a sign of crashing. Cheap, right? And the VIX, we were just at 11, guys. What was it, 1 week ago? 1 week ago, I spent 25 minutes talking about the VIX being at 11. And I'm like, why don't you just buy it? It's like free money. Just buy it VIX. It'll go up. And let me give you 3 reasons why. Does everybody understand why? Yes, we all understand why. Is it complicated? No. Is it logical? Yes. 48 hours later, you would have been massively profitable. But it's not like radical weird science. It's the common sense stuff that's going to make you money. Yeah, from 11 to 31. Dude, I teed that up for you, right? But again, was it voodoo magic? Was it weird science? Was it artificial neural network intelligence computer? No. It's total common sense. And that's the stuff that's going to make you money, guys. Your ability to do common sense. Like the billionaire friend of mine who got pitched by a currency trader that he had some weird fuzzy logic machine that can predict the future. And I looked at him, I'm like, that's the dumbest thing I ever had. You're going to give money to a guy that's trying to find a machine to do the work for him? This guy doesn't want to do the work? Why would he not want to do the work? Sounds like he just wants to take your money and get filthy stinking rich. You're already filthy stinking rich. So why do you need that dude? Why don't you find someone that loves the work? Because that guy's going to be passionate about it. He's going to care about it. He's just doing his job. He's passionate, like, right? Love the job. That's the guy you want to hire, not the guy that's trying to get out of the work, right? So I want you to love the work. I want you to love what you do and have a passion for it. And I want you to get rid of the complications and such. Make it very, very simple as logic. Like, I grew up in the farm country of Canada, a place called Saskatchewan. And I remember times in my life when I stood in a spot, and I look that way and I can see the horizon. No trees, no hills, no nothing. I can see all the way to the horizon. I can look behind me, see all the way to the horizon, right and left. And it's all wheat field, no buildings, no trees, no hills, right? This thing besides me was a barbed wire fence, and everything else was wheat, which is above my knee but below my hip, right? And the sky is 2/3 of everything. 2/3. You actually can see the planet, and I'm the tallest thing in the world. That's where I come from. Okay? Very, very simple, hard-working, quiet people. What you need is that common sense. You don't have to be the fast-talking New York City trader. You don't need to be the PhD from MIT working as a quant, doing complicated models. You do need to understand fundamental analysis, and you do need to understand technical analysis so that you know things like when is oil in demand and when is it not in demand. Okay? All these news events that come through the week, pay that much attention to them because they just all add up into macroeconomics. I know what the trend is. One individual news event, no matter how radical, generally is not that important. 99, 99, 99, 99 out of one, right? But every once in a while, there is something that changes the policy. And that changes everything. But that can either be predictable or understood when it happens, right? So what we need to do is make sure we're on trend. We need to be beyond news because fundamental analysis. News is just a news event. Okay? And understand the longer trends. And then use technical analysis to confirm or deny our analysis. Okay? That's where you want to get. So is oil going to go up or is oil going to go down? Okay? Well, what I said 10 days ago, it's either going to go up here or it's going to go up here. Okay? So today, if you want to think about it, if I rubbed you the right way, ask yourself if you have or can develop common sense. Right? Now that seems simple and rhetorical even, but it ain't. But I want you to understand that you do not have to be a genius. You do not have to be able to predict the future. You certainly do not have to be, nor should you try to be smarter than everyone else. That is a very, very, very slippery slope that leads to disaster. You absolutely do not have to be smarter than everybody else, right? You have to be, and you can't be right or wrong if you haven't made a decision. Then the technical analysis of trade makes you out, either for a winner or loss. It doesn't matter. Really, it's not even up to you. But if you thought it was going to go up here, oops. If you thought it was going to go up here, you use technical analysis to confirm that. You can do that, can't you? If you're right, you make some money. Good. So, and if you lost some money, you're like, well, the next shot's here. Okay? If they did work out, at what point do you become aggressive? Well, look, just because it went to here doesn't mean it's bullish. Okay? Up here would be way better. If you got this next week, that'd be a great, great start. And then the week after, if it did this, I'd really start being aggressive. Because now I'm using technical analysis on the short term to confirm my technical analysis on the long term. Okay? I'm a bull in a bullish market. And I use technical analysis, the market is bullish. The first move, it's not bullish. It's still technically bearish, right? So once I break some sort of line, whatever line you want, okay, at some point you have to say, I'm bullish and conservative, right? I'm bullish or I'm aggressively bullish. But it all started with the others, the most important thing. Either here or here you're going to be bullish. Here you're a little bit bullish. Here you're more bullish. And here you're extremely bullish. And if you can just do that, I don't know. To me, they're kind of two things. One, mentally, you make a decision strategically. Okay. And then two, you follow it up. Okay. You follow it up with actual trades. But this should be common sense. Okay. And this should use simple processes. It should not be complicated. I am not a phase where you get a pattern like this, and then you got to have a pattern like that, and this has to be 618 of this, and this has to be a 382 of that, and you're looking at the angle of this, the angle of that, and the peak to this, and the peak to that, and you have all these weird mathematical formulas. You're like, do you honestly believe that that's how the market works? I don't. I see just a bunch of dudes trying to do some deals, right? I see business decisions like we need to rebuild our inventories, or or we need this commodity, but we're in short supply. Well, I'm willing to pay a higher price. I mean, that's what it is. I wouldn't get caught up in these like crazy technical analysis kind of things. Not that they're crazy, but it's the wrong question. One thing, like for example, moving at the speed of light. Humanity seems to be working like, if we were to visit another solar system, it would take 100,000 years each way, assuming you can move at the speed of light. But we can't move at the speed of light. It would destroy everything, but right? So how can we move faster and faster and faster and faster? It's totally the wrong question. Humanity shouldn't waste time trying to make an object go super fast. It'll self-destruct. So what should we be focused on, guys, if you wanted to visit the next solar system? If moving at the speed of light, teleportation, yeah, but yeah, that's so vague. Black holes, yeah, but that'll destroy you because all you're doing is moving at the speed of light using the black hole. Cryogenics, yeah, but then what's the point of cryogenics? When you get back, you're 200,000 years old. Like, what will Earth look like when you get back? And you're like, hey, man, I'm back. Thank you. Aaron's got it. Warp drive. How to change the fabric of space-time. See, imagine a toy car with wheels that spin on a piece of carpet. Okay? And in front of the carpet, you squish it up. And so it all gets squished up in front. The car hasn't moved. And then from behind the car, you pull the carpet, and the carpet in front now smooths out behind the car. Car hasn't moved. except he's traveled to the others. People inside didn't move. The spacecraft didn't move. It wasn't traveling at the speed of light, because that would have destroyed the spaceship and everybody inside. So it's not how you can go somewhere fast, it's how you can go somewhere without moving. That's the proper question, right? So how do you outsmart the market? You don't outsmart the market. Are decisions made because of this move is a 618 of a 382 of a simple blah blah blah? No. Why does crude oil go up? Why does euro go up? Why does the yen fall? Why did these things happen? Because some business people got around a table and said, I need some crude oil. And someone looked out the window and says, well, we don't have much of it, so you're going to have to pay me a lot of money. Or he looks out the window and like, oh my God, I have so much oil, I have nowhere to store it. All my tanks are full, and I have 3 ships waiting to unload, except I have nowhere to unload this stuff. So you get a better price. That's how the world works. So if you can figure that out for gold and for oil and iron ore and wheat and soybean, you just figured out the entire commodity world and how they're priced in a very logical and even predictable way. So what information will you need to understand whether there's going to be an increase in demand or a decrease in demand for iron ore, or coal, or soybeans, or corn, or wheat? How do you figure out this information? Yeah, Ross, that's a very long time ago. Oh my God. What kind of information would you need for that kind of stuff, guys? It's called macroeconomics. All the information is out there. How do you know wheat prices are going to fall? Because in the spring, the government tells you there's a huge planting of wheat. Significantly more farmers than usual have planted wheat this year. Did you know the government provides that data? So you're like, really? There's 20% more farmers are planting wheat this year than normal? Guess what? If they all harvest their wheat, there'll be too much wheat. Wheat prices will fall. But if they chose to plant wheat, what did they not plant? What was the substitute? Well, maybe soybean prices will go up. Maybe barley prices will go up. Maybe corn prices will go up. What if there's a massive flood that destroys a significant portion of a farmland along the Mississippi? Stuff that usually plants wheat and corn. Maybe those prices will go up. I mean, I don't know. If China is importing steel, right? Or how about this? China's exporting steel. So they're making steel, right? So Canada is really upset now because the Chinese are flooding the Canadian market with steel. Bad for Canadian steel, right? But if the Chinese are making more steel, they're going to need iron ore and coal. I mean, I don't know. There's just, you can get into it, but it's really not that complicated. Like I said, if you want to figure out supply and demand for oil, just go to the EIA website. I swear to you, in probably 30 minutes, but let's say it takes you a while, in an hour, you can really get yourself into some smart. You don't need me for that. You could totally do this yourself. You could completely become an expert in oil. You might have to explore Brent if you want to have European oil and American oil, right? Cool. And the EIA and IEA websites and some OPEC, and you can really get into this. And then what could you trade? You could trade Canada, Norway. Why? Well, they have Brent seed oil, right? So you have Brent, and now you have WTI. Cool, right on. And you could really become an expert. This is what you could do. But if you were going to do that, you would need to read the EIA and IEA and OPEC reports. You should pay attention to OPEC meetings. I think you could do that. Okay. Seasonality, yeah, but that's what you get at the EIA and the IEA. All these things are logical. See, I have a Newtonian physics point of view of the world, especially of macroeconomics, that this all works together. So if you could figure out oil, you could probably figure out 3 or 4 currencies. Okay? And that's a start. 10 years from now, you could probably add to that. Okay? But what are you going to do now? You need to be a master of something. Okay? Something. Just something. Please. Just take what I say to you seriously. Go on your planning retreat with yourself and say, you know what? I commit here and now. I'm going to be an expert in the oil industry, and I'm going to start trading not just oil futures contracts, but I'm going to trade commodity currencies related. I'm just going to throw myself into it. I'm going to specialize, and for the next 2 years, that's all I'm going to do. And whatever decision you make, whether it's this market or a different market, just the fact you decided is going to make you a better trader. Please believe me. You have to focus. You have to have discipline. You have to have intent. Okay? You have to have intent. See, when I sit down at my chart or at my desk and I hit the start button to boot my PC, I already know what I want to do. I haven't even looked at a chart. If you still boot your, look at your charts, figuring out what you want to do, you're already doing it wrong. Please believe me. And I hope you have the patience and discipline to prove me right or prove me wrong by just focusing on that for the next 2 years and just do whatever it is. You do it extremely well and not trading like a video game or a get rich, but you have a logical intent. You say, I'm going to play pretend, and I'm going to run a long only WTI hedge fund. And people that want to either hedge against rising prices or want to speculate that prices are going to go up, either way, they're going to give you money and you will buy every time it makes sense to buy. Right? So for half your clients you're hedging, for the other half you're speculating, but everybody is giving you money simply to buy oil futures. And then if you can do some currency trading along with it, that's your alpha baby, and they're totally into it. Because if they want oil prices to fall and they're worried oil prices are going to go up, they need you to hedge, but then they're going to be worried about CAD and Kiwi going against them too, so you might as well hedge that, and boom, 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 okay? That's called a job. That's called a business. That's called what you probably want to be in 10 years from now. Start faking it now. Start by making the decision. And then use technical analysis to carry out your decision over and over and over and over again. So if you know you want WT to go up, before you even look at the chart, the hard work is already done. Then what? Now you just need technical analysis. How hard is it? Is this support? Yeah, good. Buy it, put a stop. Nothing complicated about technical analysis. You know enough to say this market's moving sideways. And then you can say, you know what? This market's now moving up. I should increase my aggressiveness. I'm a buyer of the next dip faux show. And then it's made a higher high, and you're like, oh, I am so happy with this. I'm going to move my stops. I'm going to pyramid this. I'm going to add some more. Everything's going to be good. And when it comes down, you're like, oh, look at my technical analysis. So I hit a pivot profit zone and starting to show weakness. I'm going to take profit on everything. And all my clients are going to be super happy. Why? Because you had the intelligence to buy low and then take profit at a pivot profit zone up here. Like, really? You marked it red because you knew it would be in place for it to fall. I mean, really, it shouldn't be too complicated. So focus on simplifying everything. Okay, guys? Simplify. And then do it. Just do it. Just do it. You can do this. You got it. I know you got it. I know you can do this. I really do. But stop making it complicated. You make it complicated because there's no vision. Think big. If you had $1 billion, would you be scalping? No. Pretend you have $1 billion. Stop scalping. What would you do if you had $1 billion? I talk to billionaires all the time. You're like, hey man, I can make a quick 20 million. Like, you have to make decisions. I don't know, but see, day trading is not anti what I'm talking about. Day trading is pulling the trigger. Okay? Now you can have a short-term outlook, meaning the next 3-4 hours, but it doesn't have to go against the long run. Right? Right? Ideally, you're in a situation where you're down here during your time period and you want to buy, okay? Right? You still need your support and resistance. You might have to be a little more clever on knowing what your support or resistance is. I would say the problem with day trading is that you have to be at the right place at the right time, because you're betting on direction for a small period of time. Okay, that's the problem, and that's where most of you have gone wrong. Really good at technical analysis, but you get unlucky a lot. Right, John? But like a day trade, for example, like this is an obvious sell. This is an obvious sell. This is an obvious buy. and this is an obvious buy. We don't know if either which ones are right and wrong. Like, I don't know if this is going to go up, but I know it's an obvious buy. You're day trading, but now you got to be there at exactly the right time. And then you got to patient, which means you might spend the next 90 minutes to 2 hours setting up the buy. And most people don't have that kind of patience. They just don't have it. So that's the problem. They're doing everything. They're doing it right at the wrong time. And the example I gave before is when I was mentoring someone who was day trading, essentially using a day trading strategy that I've, just basic stuff that I've taught. And then I'm like, well, why are you doing that in Asia? Oh, well, right, it's after I put my kids to bed, but before I go to sleep, and I have to get up in the morning, make lunches, and do all this, and then I got to go to work, and so I can only trade between these, 2 or 3 hours a day. And I'm like, oh, well, everything you're doing is perfect, except you're doing it at the exact wrong time of day, and that ain't gonna work, right? So if you're not here when this happens, right? I mean, you need a day trade is being here ready for this. A day trade is being here ready for that. Okay. Swing trading is, hi, I sold here, and I expect to be short for 3, maybe 4 weeks, maybe 10 weeks. Right. Here's a monthly swing. That's what I expect. Okay. A day trade is probably sell here, buy here, sell here, buy here, sell here, buy here, buy here. And there's significant more room for error. You see that? There's more significant room because if you're not here, it's a shitty trade. If you're not here, it's a shitty trade. And I mean physically at your desk. Because now you have to analyze the trigger. Very often you're at these areas and you don't get the trigger. So you could sit for 2 hours and get nothing. And most people don't have the discipline, so they start firing off trades. And really, you could have just sold this and walked away for the rest of the month. So be careful what you ask for, right? No, I'll teach you how to day trade. But remember now, time is an issue. When you trade this way, I'm essentially removing time from the equation. Like, for example, let's say I shorted here and my stop's here. Okay. Is there, and let's say the market does this. Is there a point in time when I realize I'm probably wrong? Or do I have to just sit here forever just letting this? Yeah, this would certainly be disconcerting. Okay. Is there bad luck involved in this? No. Fundamentally, I was wrong. Something took over the market. The market turned bearish, and I was a bull. Why was I a bull? I don't know. I bought down here or something. I don't know. And I thought, summer driving season or something, or I don't know. I made the wrong. I'm not unlucky. I was wrong. I put some money on the table and I lost money. But I did my analysis, and my analysis was wrong. it wasn't like PCE came out and it was hotter than expected and it did this and then it this on a 5-minute chart can get you, you know, if you were short and this took you out for a loss, that's very unlucky. But that ain't going to happen on a long-term, fundamentally based technical chart, right? So if I'm going to be wrong, my analysis has to be wrong. Okay, but you can be wrong. You know, I don't know any of these big candles. Because remember, this is a day and this is a day. This candle could have gotten you out wrong. I don't know, like, right? You could have bought here and lost money, or sold here, or something. I don't know. You know, you can squeeze it in. So if you put more time on your chart, then time becomes less of an issue, is what I'm trying to say. Okay. Okay. You don't have to be at the exact right time, and then hope news doesn't interfere. Okay. So that's why I said before you do anything, simplify. Right? Give me 3 reasons why oil should rise. Or if you say this is a downtrend, great. Then give me 3 reasons why oil will continue to fall over the next 6 to 12 weeks. Can't be that difficult. Just back it up with some basic research. Okay? Just back it up. Make a decision. I honestly don't care what the decision is. And then back it up with some evidence. And then trade it. I bet you anything you will make money. I don't know why you don't take this advice seriously. Make a decision. Any currency pair you want, any commodity you want, just even the stock market, it doesn't matter to me. Pick any asset. Make a decision on the. Back it up with some sort of logic. And I bet you anything, if you use technical analysis to trade it properly, you will make money. How much money? It only depends on the market. If you're a bear, right? If you're a bear on oil, right, you'll be selling this, you'll be selling this, and you'll be selling this, and in the future you'll be selling this, and you'll make, and you sold that, so you'll make money, make money, make money, you make money, you make awesome. Great, great, great job. But if you're a bull and you end up buying this, you're gonna make a little bit of money. And here you did better, and here you made a little bit, and here you made a tiny bit, and now you're thinking about taking another shot, and you're probably still profitable. Who's more profitable? The bears. Why? The market's falling. But this whole thing's going to reverse one day, probably, at some point. This will go up. I mean, maybe oil falls all the way to $40 a barrel. Okay, well, then around 40, it'll probably go back up, right? And so then the bulls will have their turn. Can you predict when these things go up and down? Yeah. But then there can be exogenous shocks that can change these directions, the direction of markets. And so over the course of a year, you will do better than other periods of time over the course of the year. And it's not for you to decide. You're not big enough, you're not smart enough, you're not beautiful enough. But you should be able to make a little bit of money when you're wrong, and make a lot more money when you're well, not when you're wrong, when the market disagrees with you. And you make a lot more money when the market does agree with you. And you take everything out. The timing doesn't become an issue anymore because you're not in control of when the market is bearish. You're not in control of the market is bullish. But if you've made this decision, in particular on the long run, you will do well. Well enough for a yellow Lamborghini? I don't know. I don't know what you got. And I don't know the future. But I know you can do this. So I'll see you tomorrow, guys. Peace on earth. May the pips be with you. May our profits be above average. Thank you for being a client to TradersWay. Huh? We appreciate you. We want you to succeed. Slow and steady, steady and slow. Huh? Don't focus on getting rich quick. Focus on building a career. Focus on staying a happy, enthusiastic trader for the next 20 years. Huh? Yeah. Namaste.